What's up, traders? Welcome back. I'm Kenya with BK Trading Academy. And in today's training, I want to talk to you guys about locking in profit. So if you know me and you've been following us for a while, you know that risk management has become very big for me. I've excelled at it. I've come a long way with it, and I love teaching it to our students. And one of the things that I want to share with you is about locking in profit. So how do you know when to lock in profit? What strategy or method should you go about? I'm going to show you on the chart and give you a live example in the New York session right now and show you where I would have locked in profit. What is my reasoning behind what I do? So every time you are taking profit or you're exiting the market, you're entering the market, you need to remember that a plan is very helpful for you, because if you don't have a plan, you're going to find yourself just placing trades and not knowing why you're doing it. You always want to have reasoning behind what you're doing. So let's hop into the chart and we will take a look more at exactly when should you be locking in profit and how can you do it. So let's take a look at GBP NZD. So here is a pair that we've been trading for quite some time. Let's go on the higher time frame, and I'm going to show you exactly what I think about this pair and how we should be trading it. So let's hop out to the monthly and just kind of look at overall what this pair has been doing. So if we look at the monthly, you can see that we were previously in a nice downtrend. So look at this wave here. Price gave us a correction back into the previous structure here, formed resistance right at this level, moved sideways a bit, continued to dip, and then it's just kind of been moving sideways. As you can see, this is our monthly support here at 187, and then we have our resistance pretty much up here, but it's kind of hasn't broken this resistance right at about 204 in some time. So I like to just kind of get an overall feel. What is the market doing long term? It's very helpful in my analysis, especially as a swing trader. I'm going to move down to the weekly, and now you can see on the weekly we are in a downtrend. Now, one of the things that I spotted very quickly with this pair was that we were previously in an uptrend where the market was moving upward. It then moved downward, gave us a low here, broke above this high right here at 1.99, gave us a new high, but then gave us a massive fall to the downside. We then got a nice correction, giving us a bearish flag on the weekly, and I predicted that we could see more downside. Now, the price did become a little bit choppy for a while and failed to break out of this weekly channel, but we did have our weekly bearish flag, and we finally saw the breakout of that flag, and now that bearish trend has continued, and now you can see where it is finding support right at where this previous support formed right here previously more than one time, right? So here we have a touch. So let's just define it. So here is our support. Here is our support within that same area, and now price is retesting that area again. So considering that, we want to be watchful of what is our weekly support and also our weekly resistance as well. But as you can see, we are now in a downtrend that is defined on this weekly time frame, and now we can move down to the daily. So moving down to the daily, you can see that that bearish continuation has continued, and now what I'm going to do is focus on my levels. So if I make this a little bit bigger, you can see here that price is finding resistance right at a previous structure that was also strong support as well. So here is our resistance, and we have rejective resistance right in this area. We also have a strong level of support, and I can just kind of continue to scroll out, and you can even see here in that same area we also had strong resistance, and look how much the price fell, right? So in this case, since my directional bias is short, I'm going to be looking for shorts on the lower time frame, on the daily, on the 4 hour, on the 1 hour, even if I'm scalping, right? So let's say, for example, I took a trade right off of this resistance here, and I would look to take profit. So I'm going to look left, and I'm going to find the next reversal area. Well, you can see that this area here was previous support, and it was also previous resistance. So that's where I would expect the first bounce. Let's just calculate the pips from this rejective resistance and measure on down. So had I entered, let's say if I have an account at, let's say $5,000, and I'm risking 2%. So what I like to do, let's go ahead and pull up a position size calculator. I'm using earnforex.com. Every single time you want to calculate your risk, you need to use a position size calculator, calculate your risk. Let's say, for example, we have a $5,000 balance and we want to risk no more than 2%. And let's say I am intraday trading, or you can even say swing trading. So let's say I'm swing trading. I'm going to use 100 pip stop loss, and I'm trading GBP NZD. So let's find GBP NZD on this list. There we go. We're going to put in the current price right now at 1.911. And we're going to go ahead and click calculate. So based on this $5,000 account, we must not risk no more than $100. That's our daily max risk, and our daily max lot size is 50 cents. So considering that, I'm going to be very conservative in how I approach this chart. So let's say, for example, I go in with just a 10-cent lot size. I'm just going to use a fraction of that lot size, right? And let's say I get short here, but maybe I'll use two positions because I can use 50 cents. So I'm going to use two positions at 10 cents a pip. And let's say, for example, I want to take some of that profit off the table as the market moves in my favor. So the question, when should you be locking in profit? Number one, when the direction is in your favor, when the overall market is in your favor. So if you're seeing growth to the downside, or if you're seeing a decline, more decline, and you expect this bearish continuation, then of course you want to be adding on to that position sizing or locking in profit, as we've discussed previously, because you have the direction in your favor. So what I like to do is, if I get in with multiple positions, one of the things that I like to do is always lock in profit. So as this market moves in my favor, I'm going to take one of my positions probably off the table with about maybe 70 pips. That's really easy to get on a GBP pair like GBP NZD. So one of my positions, I will make about 70 pips. If that's 10 cents a pip, then I would make $7, all right? $7 and some change. Now, this is what happens because the market doesn't just move straight up and down, right? It takes some time. It bounces from one support zone to the resistance. So if we get a pullback, if I'm still in a downtrend and all of a sudden, you know, when the market opens, usually you're going to get a breakout in one potential or one direction. So let's say the market breaks out, in this case, GBP NZD, it breaks out to the downside. You see that the market has dropped 70 pips, right? It then bounces back or retraces back to that level. What I like to do is set an alert at my entry, or I like to take profits off the table. If I get a retest back into my initial entry area, I will trigger a new position. So I would set a sell limit order, for example, and I would re-enter the trade. Because how many times have you been in a trade, right? Intraday or swing, and you've been in that trade for some time, and all of a sudden you're like, wow, this is great. I'm up 50 pips. I'm up 70 pips. Then you look 3 hours later and you're back in the red, right? So how many times does that happen? That is why I am always locking in profit. I don't care what's going on. If that volume is in my favor, if I know that after that volume is over, the market is going to have to correct itself. It has to settle the noise, right? Like it always does. So when that market gives us a pullback, and if our trend is still downward, I'm going to still be applying that same risk plan that I set out. I'm going to enter on pullbacks. I'm going to set more entries or another entry to re-enter. And now guess what, guys? Once that, look how the market actually pulled back. So let's go down on the 4 hour and let's just look. So look how the price started to come down, right? It came down. Let's just see how many pips it came down from this wick. So had you got in at this wick, it came down to 70 pips. So let's say you traded 10 cents a pip, you would have made $7. What did it do? Couple hours, it pulled back and retested the resistance once again. Look at this retest right here, giving you a double top on the 4 hour. And look at that continued decline. So you could have made $7 on that first position. Had you re-entered another position, then you would have made another $7 while your other position is still floating in profit, right? So you want to be locking in profit when the market is in your favor. If you know that notice on this 4 hour, we were in an uptrend. However, on the daily, we're in a downtrend. So you always want to be mindful of the directional bias on the daily, especially if you're intraday trading or if you're short-term swing trading, okay? So I like to lock in profits from zone to zone. I like to also make sure that I'm looking at potential retest opportunities of my initial entry. So you might ask yourself, well, if the price pulls back, exactly where should I enter? I'm always looking at, if I got in right here at the wick, at the structure of this resistance, then I'm going to be looking for a retest of that area or within a few pips of that area. Sometimes it won't come exactly to where you previously entered. So maybe you want to be alerted about 10 or 15 pips before the market actually reaches that area. But if you start with entering several positions, just know, hey, when the market is moving in your favor, take some profits off the table, guys, because more than likely it's just going to keep pulling back. You'll probably get a few pullbacks until it actually does continue to take off. So I hope that this video is helpful for you, just in giving you a practical example of when and how to lock in profit. Remember, you want to be locking in profit as the market moves in your favor, and also know that when you're trading, especially during a market open, the market is going to move one particular direction, and if you're in that trade for some time, more than likely it's going to move, it's going to retest or pull back. You could be looking for opportunities on those pullbacks and continue to lock in more profit as it moves in your favor. Now, in this case of GBP NZD, if we set a stop above this 4-hour structure, then worst case scenario, if it moves to the opposite side, we would have made some profit, which is great, why we should be locking in profit. But if it so happens to rebound and go the opposite way, then we would get out with minimal loss. All right. So guys, I hope that you found this helpful. If you are new here, don't forget to click that like button. And also, if you're a returning subscriber, make sure you give some love on this video. Really appreciate it. And also subscribe and turn on the notification bell so you don't miss the next upload. Thank you so much for watching. I'll see you guys in the next training.